Yeah, we back with another episode on this beautiful Monday, MLK Day. Shout out to MLK, the impact that he had on the world. Um, I'm grateful to be here with another episode. I'm excited. I got some earnings to break down. We had a lot of the banks report last week. It was kind of some mixed signals. It was kind of some mixed signals from those earnings. So we're gonna break those down to see what's going on in the economy, how can we gauge and moving forward, and everything that's happening. So we're gonna go ahead and get straight into it. You already know the vibes. If you haven't subscribed to the channel, you have to. Please like this video, share it with a friend. Help me increase my platform, my influence, and let's get into it. Let's get into it. So last week you had some of the major banks that was reporting, right? You had Citibank, you had Wells Fargo, J.P. Morgan, BlackRock, and you kind of had mixed results in between of those banks. You had mixed results. So I'm gonna be going over J.P. Morgan's breakdown. I'm gonna also touch on a little bit of Wells Fargo and some reoccurring themes that I saw in most of the banks. But we're gonna break down J.P. Morgan's numbers, right? And I mean, I'm just breaking down their numbers because I'm kind of biased towards tech stocks, so I don't really like financial stocks. I want to point out some stuff that I saw, but of course we're gonna touch on the positives as well. I can't be 100% biased, so we're gonna get into that and everything. But let me go ahead and touch on J.P. Morgan's numbers real quick, right? Net revenue for the fourth quarter of 2021. Net revenue, 29.2 million, right? 29.2 million. In third quarter of 2021, so the previous quarter before that, they reported 29.6 million. So quarter over quarter, their revenue was down 1%. But how about fourth quarter of 2020? Let's look at those numbers. In fourth quarter of 2020, they reported 29.3 million in net revenue, which was flat. So their revenue was flat year over year, but it was down 1% quarter over quarter. Let's keep that in mind. Let's keep that in mind. Net income. Net income for fourth quarter of 2021 was 10.4 million. And I'm giving them the benefit of the doubt by saying 10.4. It's really 10.399, but 10.4 million in net income. In third quarter of 2021, their net income was 11.6 million. So quarter over quarter, their net income was down 11%. How about fourth quarter of 2020? Fourth quarter of 2020, their net income was 12.1 million. So year over year, their net income was down 14%. Quarter over quarter, their net income was down 11%. How about the earnings per share? So earnings per share for fourth quarter of 2021 was 3.33. What about third quarter of 2021, the previous quarter? Well, that was 3.74, down 11%. Fourth quarter of 2020, 3.8 per share, down 12%. I mean, so just from looking at that report on JP Morgan, and of course you have other banks, right? Citibank didn't really report that well. Wells Fargo did good. BlackRock did good. But it's kind of showing you, like, if I'm an investor, do I really want to put my money into the financial sector? Do I really want to put my money into banks? Obviously, that sentiment is going to change a little bit because you have the rate hikes coming up. So that's going to, be a little different. That's going to help banks since rates are increasing. The loans that they give out, they're going to be able to make a bigger return. But even then, the financial sector is just not that attractive to me. I just don't find any interest in putting my money there. I really like technology. I mean, technology, consumer discretionary, some materials, but financials really doesn't impress me like that. I really don't find myself investing into financial sector. I mean, and based off of these JP Morgan earnings, I wouldn't want to put my money into JP Morgan. Now, again, you got to remember, I'm not a financial advisor, so don't take any of this as advice on investments. You should also do your own research and everything, but I wouldn't want to put my money into the financial sector based off of what I just read from JP Morgan's earnings report. Now, looking at the other banks, Wells Fargo, JP Morgan, Citibank, there was a common theme that I saw. There was a very common theme that I saw. And this is kind of a gauge of what I'm about to go into, is kind of a gauge of what can we expect forward in the economy, right? And this is just one data gauge that we're going to look at. You have all these other factors that, we have to take into consideration as well. But this is just like, okay, how is consumer confidence? How is consumer spending based off of what these reports are saying from these banks? So the theme that I saw, right? Credit card spending was a continued shrink that I've seen in all these earnings, all these reports. Credit card usage and spendage was up, right? And a thing that I noticed was a lot of the companies aren't able to make as much profit, as much net income off of their credit cards, off of their debit cards. Why is that? Well, after doing the research, I found that there are actually high acquisition costs, which means that there's increased competition in trying to get the consumer to spend credit cards, right? So if JP Morgan has issued credit cards, they're kind of having to pay high cost to acquire those consumers to use those credit cards. So those costs are cutting into their profits, which is why when you break it down by each segment, the credit card segment, I'm not sure what JP Morgan specifically calls it. I think it's like consumer spending segment or something like that. But yeah, you can look into that. But there's high costs to getting these customers to use these credit cards. All these banks, all these companies, especially MasterCard, Visa, and all these different banks, they are fighting for the consumer to use their credit card because that's going to make them money. But the competition is so high right now that the costs are so high to get those customers. And once they actually acquire those customers, it's actually cutting into their profits. So the reason why I thought that this was important is because that shows that the consumer is actually willing to spend, which is actually a good thing for consumer confidence and spending for the economy. So I think that's a good signal in terms of where we're going in the economy. Again, we have to take into other considerations like inflation, of course, the PCE index, GDP, a lot of other things to see where we're going in the economy. But this small specific gauge that I saw, I think was huge. Consumer spending and credit card spend was up. All right, let me go into a little bit more details. So let's go to purchase volume. JP Morgan's purchase volume was 29%. It grew 29% year over year. 29% purchase volume. Combined debit and credit card spend was up 26% year over year. And the purchase volumes from a lot of these banks, Wells Fargo, JP Morgan, they were up significantly from 2019 numbers, pre-pandemic numbers, which is huge. So even when you go based off of 2020 numbers, you have to take into consideration that we were in a pandemic. But 2019, even those purchase volume numbers were up 2021 from 2019. So this is basically telling us, I think, that we're going in the right direction in terms of consumer confidence. They're not letting Omicron variant really scare them that much into where they're not spending their money. They still hopeful of where the economy is going. So I think that was huge. And one more thing that I wanted to point at was auto loans. A lot of different banks are being affected differently by auto loans. For example, Wells Fargo auto loans increased, while JP Morgan's auto loans decreased. Why did Wells Fargo auto loans increase? Well, they're actually benefiting from higher used vehicle prices. So everyone knows that like used car vehicle prices was at an all-time high. A lot of people thinking this is the top. After this is just going to bottom out and start to drop. But Wells Fargo actually benefited from that. Now, why did they benefit but JP Morgan didn't? Well, I mean, there's also not that much supply in terms of new vehicles. So in terms of new vehicle supply, JP Morgan couldn't capitalize because there's not that much out there. There's not that much out there for new vehicles. So their auto loans decrease. And this is why it was kind of mixed signals from these banks, right? You had JP Morgan telling you one story, Wells Fargo telling you another thing, and Citibank telling you another thing. But that's why the one common theme that I saw was consumer spending in terms of credit and debit, which was up from 2019 numbers, which was huge. And I feel like a lot of people aren't talking about that. So the first week of earnings, I think was, it was mixed signals. There's some good things to take away. There's some not so good things to take away from it, but it's mixed. And again, I personally don't like the financial sector, so I don't really find any of these numbers attractive in terms of revenue and income and earnings per share. But one thing that I did see was the credit spend and the debit spend up from 2019 numbers. I mean, I think that's a good sign of where we're going. Now, the thing that I'm waiting on later this month is earnings from the tech stocks, Microsoft, Apple. And, a lot of people were asking, like, where do you think the market is going? Where do you think the market is headed? Me personally, I think we still got some more room to drop. Now, I'm not saying there's going to be red every day, but a lot of the mega cap stocks, the big stocks like Apple, Google, Nvidia, they really haven't corrected that much. Now, Microsoft corrected really quick, which I think is a good sign because I think Microsoft might take off early in this year. And I stocked up on Microsoft. Boy, I stocked up on Microsoft. Microsoft hit my price. I think my price was 306. 306 was my price for Microsoft. So once it hit that 306, oh man, I stocked up. So I'm hoping Microsoft has a good year in terms of the cloud and enterprise space and how much business they have on that side. I'm waiting for Apple's earnings. I'm hearing some rumors that the AR glasses might get delayed, so I'm not sure how that's going to affect the stock price. And me personally, I think that no matter what happens in their earnings, if they beat or if they disappoint, I think their stock is going to sell off because Apple hasn't corrected yet. Apple is only like $12 or $13 off from its 52-week high. So I think Apple still has some more room to go in terms of the downside, which is a good thing for me because I'm looking to get into that thing. So I'm waiting on a lot of tech stocks to report earnings, and maybe the sentiment will start to change in the market. But I mean, I don't really care. I don't really trip. It's a long-term game. You got to remember it's a long-term game. If the market is down like this, I look at this as opportunity. So you already know what the deal is. We covered those financial earnings. You can go and look at each bank's earnings and get a breakdown of what's going on in terms of their profits and, reoccurring themes that you see throughout the banks. But that's all I got for this episode. Next week, tap in with me. Make sure you subscribe, like this video, share it with a friend, and I'll tap in with y'all next week.